Welcome back to the Daily Journal. So let's jump into Bitcoin's price action from Tuesday's New York session. This was the trade that I had taken. It was my first trade of the week. But this will be a good lesson in patience because what unfolded was the 10 a.m. reversal, which was a much better trade setup. So let's get into it. Starting off the 1 hourly, when I got to the charts, I noticed that we had traded into this 1 hour order block, but I did notice these relative lows. But going into the session, we had been accumulating since London. So I was looking for manipulation of either the London lows or the London highs, and I'll trade off of those. So going into the session, I noticed we had swept a 1 hour sell-side liquidity inside of this 1 hour fair value gap. And these relative highs were really, really clean. So I had a high time frame discount array to trade off of and really clean liquidity above as my draw. So dropping down to the 15 minutes, when I saw this price action playing out, I immediately dropped to the 1 minute. And I could see now that we had closed above this down to close candle, which makes this an order block. And I can see on the 1 minute, we have that reversal confirmed, the smart money reversal. And when I got the projection out, I noticed that the drawn liquidity lined up pretty much perfectly with the 2 to 2.5 standard deviation. So I waited for the open of this candle and I waited to see how price played out. Now, what I was looking for was price to trade into this order block. That was my high time frame PDA to trade off of, because there was obviously no fair value gap on the 15 minutes. So I was using this 15 minutes order block to frame a lower time frame confirmation. And then I was keeping my eyes on Ethereum, where you can see that we had SMT once, and then we had it the second time. And on that second SMT, right over there, I waited to pull the trigger once price closed above this. I used 0.5 of this to calculate my risk, dropped it a little lower to give it some breathing room. And so 0.5 got me TR. I then just widened that to just give myself some breathing room. But once price closed above that, I didn't anticipate it to drop lower than this point, since I expected price to bounce off this order block and deliver straight to these highs. Also, we were going into the 10 a.m. at this point. So I was expecting a small wick and then a charge up to these 1 hour relative highs. And the trade played out really well. And the thing is, because of those relative lows over here, right at the open, we just immediately traded into buy side liquidity. So it would have paid better just to wait for price to trade into the high time frame sell side liquidity, because the one thing I didn't notice was this 1 hour fair value gap. So when we go back to the 1 minute, when we trade into this 1 hour fair value gap, when I look left, I see relative equal lows in pre-markets and all this low resistance liquidity, basically trend line liquidity, plus all these inefficiencies in the form of fair value gaps over here, etc., etc. So what would have been actually a better trade is that from this 1 hour buy side liquidity and the 1 hour fair value gap is to look for a 10 a.m. reversal. And you can see we've got our high time frame sweep of liquidity on the 1 hour. Now I need a second sweep of liquidity and a change in state of delivery. So we get that sweep. And now I'm looking for a change in state of delivery. And so when we have expansion into a liquidity pool and then immediate expansion away from that, this expansion plus an expansion equals a reversal. But of course, we need to close beneath this. And so there we go. At this point, when you're trading aggressively like this in terms of expanding away from your liquidity pool, I'm happy just to jump into a short. And here's the thing. On the 1 minute, that immediate drawn liquidity is only basically just 1 over 1 hour. But remember, we got these high time frame relative lows below that. So for me, I'll look at a higher time frame to calculate my standard deviation projection. And there I get, look at that, stunning. Those relative lows line up almost perfectly with the 2.5 standard deviation. So we don't have to be perfect. I always just go for the 2 standard deviation. And let's see how the rest of that plays out. And there we go. So it trades down to the 2.5. Let's see if it hits the bottom level, and it eventually does. So you can see that had I just been more patient and waited for buy side liquidity and for the market to show its hand and traded after 10 a.m. Yes, I executed basically at 10 a.m., but just to give it a few minutes just to play out to see what price does. Had we continued higher through that 1 hour fair value gap, great, you could look for these relative highs, something like that, right? But the fact that price immediately traded into buy side liquidity and 1 hour fair value gap, you could have framed really lovely 10 a.m. reversals. But you can't be perfect, can't win them all. And I executed my models to the best of my ability for this session, and that's what counts. Still a win for following my process, and the result was also a win. So win-win on the day, and I'll see you guys in the next one. Cheers.